Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, August 23rd, 2023. I am Frank Ochoa, aka PivotBoss. Happy Hump Day, everyone. Here's a look at the daily time frame of the ES right now. Downtrending market, very clear downtrend has been in play. One of the things we've been looking for are failed new highs each and every day, or every day appropriately, looking for that failed high and looking for a trap and reversal back down. Yesterday we were looking for that as well. How is price going to respond? Was it going to pull back below the previous session's high? Eventually it did and returned back to the midpoint of the day. Right now seeing a little bit of an inverted check mark developing at the moment, but it is inside day. And one of the levels to keep an eye on would be the previous session's mid. To find too much acceptance beyond that zone, which is about 44.17.5, would open up a push to the previous highs. Any major push to the previous high could open up a stop run day up scenario where you could see a short-term bounce to the upside. So keep that in mind. Overall, this market could continue lower toward a couple of key levels. The big one that we talked about before is 4,200. That's the edge. 4,600 is the edge up above. We mentioned before, to find acceptance to 42 opens up 48. And now that we're failing here, the midpoint here is going to be that 4,400 level. To fail there opens up 42. If we can manage to hold here, you could trade in this upper half for a little while longer. So keeping an eye on 4,400 here. Now there is a gap fill down below, 43.0475s. That could be a magnet for price down the road. If we take a look here at the NQ, you'll notice here the NQ looking very similar to the ES. Both very bearish downtrends that have played out. This one is pulled back here, retesting the previous month's low from below. Inside day at the moment, 49% of average range. The ES also at 49% of average range. Now, again, keep an eye on the previous session's midpoint, 15,025s. To push through that level, find acceptance, could open up a breakout to the upside. As always, in a downtrend, a lower high should yield a lower low. And if that lower low fails to materialize, that's when a stop run could be seen back up towards, say, 15,556. Okay, let's take a look here at crude oil. Now, crude already seeing quite a bit of weakness here today, 1.6% lower already. Yesterday, a super narrow day. That was the smallest narrow range day we had seen in a while here, and it led to quite the breakout. That breakout here, let's quantify that one-day range, by the way. Here, let's make it okay. And what you'll see right here, again, super narrow against the averages. The one that dropped off for the 10-period reading was this one. So you dropped off the biggest day, added a small day, and you can see a little bit of a drop in that volatility of the ADR there. But for the most part, we are now seeing a breakout from yesterday's narrow range, and it's leading through a break back below or back through the FOMC key level from July 26th. Big time break there at 78.93. We mentioned before, this rejection here was likely going to lead to a move to 79s, and then through 79 opens up a return back towards 75.76, the midline at 74, and perhaps quite a bit lower. So this is a big time break right here to the downside. Expect further weakness here. Expect price to continue to hold near the lows of the session. If it's done trading, then or finding new lows, then perhaps it goes range bound at the lows. Now, we do have crude oil inventories later on. If some surprise happens, any finish above the day's midpoint would be quite the rejection and would open up a return back to 82 right away. So how we finish the day is going to be very important, but right now, bearish break with the potential to go back towards 75.76. We take a look here at gold. Right now, gold futures up about 1/3 of 1%. Just missed some key levels down below. And anytime price comes just shy of some key levels, for example, a previous month's low or the 1900 edge or the 200-day moving average, and then starts to fade away from those levels, it's usually right before it actually goes and finds those levels next time. So being patient here to see if we can go get the edge. We are trending clearly lower here in gold ever since the failure to hold above the 2000 level, and so far to reject the previous close, to fail at the previous mid, you got one more level to go get. So we're almost there. Grabbing the previous month's low is probably next for gold, still up ahead. Alright, if we take a look lastly at the YM, you'll notice the YM remains quite bearish as well. Big time failed new high here, ultimately led to the downside break from the 3-week narrow range. We mentioned at the time 1,500 to 2,000 points of range could be seen as a result of expansion from this move. And to get a breakdown here that coincides with 35.4, that means 35.4 minus 2,000 points would put you at 33.4 on the far end. And then again, if you're looking at something like 1,500 points or maybe 1,700 points of range, and you're looking somewhere in this zone right here. So again, we have down into about 33.8 still. That could be ahead for the YM. Do we break down today, or do we continue to trade within this 4-day developing range? The midpoint will tell a lot. Through 34,500 opens up the top end of the range, at which point down the road we could still see an outside day and a continuation down. So we still have some more downside likely ahead in the near term, but currently range bound and trading within a modest 40% of ADR range ahead of the RTH Open. Alright, that is it for now. We'll see how this develops here heading into the rest of the day. Good luck, trade well, and I'll see you in the trading room. Take care.